Hello everyone and welcome back to Explain the Charts. Today is November 6th, 2025, and we are taking a deep dive into one of the world's most watched stocks, Apple, ticker symbol Apple. We have a lot to cover, from their recent blockbuster earnings report and a game-changing AI partnership with Google to a detailed technical breakdown of the charts. So let's get right into it, starting with the recent news that has been driving the price action. The biggest recent event was Apple's fourth quarter earnings report on October 30th. While the company beat revenue and EPS estimates, iPhone sales came in slightly below expectations, causing an initial dip in the stock price. However, the market quickly reversed course, focusing on strong guidance for the next quarter, which bodes well for the upcoming iPhone 17 lineup. This reversal was so strong that it pushed the stock to a new all-time high in after-hours trading, touching the $280 mark before settling. Another massive catalyst dominating headlines is the reported deal, potentially worth $1 billion a year, for Apple to integrate Google's Gemini AI into a rebuilt Siri. This directly addresses one of the biggest investor concerns lately, that Apple was falling behind in the AI race. This news has provided a significant tailwind for the stock, counteracting concerns about competition from companies like Huawei and broader market volatility. Now, let's turn our attention to the daily chart to see how this news has translated into price action. Looking at the bigger picture, we can see a dramatic story playing out this year. After a period of consolidation, we saw a massive sell-off in early April, where the stock gapped down and fell from around $223 all the way to a low near $172. That was a significant drop, shaking out many investors. However, from that April low, Apple has been in a very powerful and sustained uptrend, reclaiming all its losses and pushing into new all-time high territory. This multi-month rally demonstrates incredible underlying strength and buyer conviction. The volume during the initial rally off the bottom was substantial, confirming the reversal. We can see the price broke through previous resistance around the $230 to $235 level, which was a key area of consolidation back in August and September. Let's zoom in on the most recent price action following the earnings report at the end of October. You can clearly see the large green candle on October 31st, where the stock gapped up and hit a high of $277.32 before closing slightly lower. This move was a direct reaction to the positive earnings guidance and has established a new key resistance zone. The primary resistance to watch is that recent high, right around $277, and the psychological level of $280, which was reportedly hit in after-hours trading. On the support side, the first minor level sits around the recent lows near $266. A more significant support zone is the prior resistance area around $250 to $256, which was the peak in late September. Old resistance often becomes new support, so this is a critical level to watch on any significant pullback. If we were to see a deeper correction, the next major support area is back at that $230 to $235 consolidation zone. Now let's switch to the 1-hour chart to get a more granular view of the current price action. Here we can see the consolidation that has been happening over the last few trading sessions since that big post-earnings pop. The price has been trading in a relatively tight range, mostly between $267 and the low $270s. This sideways movement suggests the market is digesting the recent gains and news flow. Buyers and sellers are in a temporary equilibrium as they decide whether the stock has the momentum to challenge the all-time highs again. The volume has been tapering off slightly during this consolidation, which is typical. A breakout from this range on high volume would be a significant signal for the next short-term move. Looking at the hourly chart, the support around $267.60 from November 4th stands out as the immediate floor. A break below this could see a quick test of the $266 level we identified on the daily chart. To the upside, resistance is forming around the $271.50 to $271.70 area, which has been tested multiple times in the last couple of days. Breaking this immediate resistance would be the first bullish sign for a retest of the major $277 high. Let's go even further in and look at the 15-minute chart for the absolute latest price action. On the 15-minute chart, we can see the intraday battle playing out. The price is currently hovering right around that key $270 level. This is a classic example of price coiling after a big move. Traders are watching for a decisive break of the range we've established over the last few days. The current price of $270.14 is essentially the midpoint of this recent consolidation, showing indecision in the very short term. So, let's tie it all together. Fundamentally, the story is bullish with the positive earnings guidance and the massive potential of the Google AI partnership, which directly counters a major bearish argument against the stock. However, the valuation is a point of concern for some, with analysts noting the stock is expensive with a P/E ratio over 40. Technically, the long-term and medium-term trends are strongly bullish, but in the short term, the stock is consolidating after a powerful move. This consolidation is healthy and necessary before the next leg up or a potential pullback. To recap the key levels, major resistance is at the recent high of $277 and the psychological $280 level. Immediate support is around $267, followed by a much stronger support zone at $250 to $256. So, what are the potential scenarios? A bullish scenario, which I see as having about a 60% probability, would involve the price breaking and holding above $277 on strong volume. This would signal a continuation of the powerful uptrend, likely driven by more positive sentiment around AI or strong iPhone 17 outlooks. A bearish scenario, with about a 40% probability, would see a failure to break the highs and a subsequent break below the $267 support. This could lead to a pullback to the $250 to $256 support zone, especially if broader market sentiment turns negative. The high valuation could act as an anchor if any negative news emerges. The key thing to watch for in the coming days is a decisive break of this current consolidation range between $267 and $272. Also, keep an eye on any official announcements regarding the Google partnership, as that remains a major catalyst. And finally, please remember, this video is for educational and informational purposes only and is not financial advice. Always conduct your own thorough research and consult with a financial professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.